Hey guys, it's Friday. We're talking mortgage. So what's this whole ability to repay thing? There was a little bit of a law that came out that said lenders can't let people just with a pulse get a mortgage. They actually have to prove their ability to repay. So ever since then, doing mortgages has been a little bit challenging because it used to be where someone could just say that they make a certain amount, take a higher interest rate, and all was gravy. But that system was abused by a lot of people, and all of us suffered as a result. So with the ability to repay, every single person has to show how they're going to pay the mortgage back to the nth degree, like all the documentation you could possibly imagine. Now, there are things called portfolio loans, which maybe can take a little bit of a different approach in terms of thinking outside the box. But even with portfolio loans, the ability to repay still has to be demonstrated 100%. The reason I bring that up is because a lot of folks reach out to me for a portfolio loan and they say, you know what, I make good money and everything is pretty clean, but it's just my lender won't get me approved because my debt to income ratio is above what's acceptable. So I'll look at it, and 99% of the time I agree the debt to income ratio is too high. And the question is, do you have the ability to repay the mortgage? Is that ability there? So if it is, how can we prove that to an underwriter? How can we prove that you have, without question, you can pay this back, right? Well, for some scenarios, here's a couple ways to get around it. On an investment property, you can get approved and not have to show your ability to repay by doing what's called like a cash flow loan for investment properties, where the deal is approved based on the cash flow of the property, not the borrower's personal income. So in this type of loan, tax returns we don't get tax returns, we don't get pay stubs, no W-2s. The deal is looked at like almost like a commercial loan. The collateral is evaluated more than the actual borrower. So that's a nice opportunity for investors who have a lot of properties and on paper the debt to income ratio doesn't really line up. The other way that you can make it work is on what's called an asset depletion loan. So you can do this on a primary residence. Basically, it's for high net worth folks. Let's say you have $1 million in liquid assets, liquid reserves, and you want to buy a $200,000 house. But for whatever reason, maybe you're a business owner, or maybe you just retired and you just don't have, on paper, you don't have a verifiable income really. So with the asset depletion loan, it would be looked at like, okay, you need to be able to show that you have enough liquid reserves to pay off the house in full, 100%, and pay all of your liabilities for 60 months, 5 years. So 60 months, right? If you can show that you have the ability to pay the house off in full, 100%, and pay for all of your liabilities, not just your mortgage, but everything for the next 5 years, then the lender, there's a chance that you can get it through a portfolio lender, get it approved on an asset depletion loan. So, I mean, that makes sense, right? It's not like somebody's saying, oh, well, we're going to take a chance. It's like, no, this person has like a ton of money. Obviously, this makes sense, and they have great credit, and they're putting, 30% down. So, yes, the common sense loans are out there, but if you want to try to get approved for a mortgage and you really can't show the ability to repay, or you don't have strong assets to back it up in the case of, hardship, you got to think about it. Like, if someone came to you asking for, $200,000, wouldn't you want to find out their ability to repay? Like, think about it from that standpoint, So when you think like an underwriter and when you think like you're lending your own money, then things start, the shift happens, because then you can look at it like, I guess I wouldn't lend my own money to, in this scenario because of this, and this, So that's what it comes down to. And thanks for stopping by. I appreciate it. And don't forget to subscribe on YouTube. And if you listen to podcasts, check me out on Stitcher or iTunes and give us a thumbs up. Appreciate it. We'll see you soon.